Hello guys, welcome back to the daily life of a day trader. Today I'm going to show you how you can use support and resistance levels in combination with fair value gaps and other blocks to find perfect opportunities in the market. This particular strategy is more especially very good for beginner forex traders who are still finding it difficult to find good opportunities in the market. So I want you to stick to the end of this video. Definitely you are going to learn something new that can help you in your trading journey. So without wasting much time, let's dive into it guys, and I'll show you how it is. So I'm going to use this chart of Australian dollar US dollar to explain this simple strategy. But before we begin, I would say that for you to understand this particular strategy, you must have at least basic knowledge about trading. At least you must understand how to identify market structure. So looking at this chart, you can see that it is obviously in an uptrend, as you can see. And all these horizontal lines that you are seeing are points of support and resistance levels on daily time frame. So but our concern is how to use support and resistance levels and other concepts in forex trading to identify opportunities as a day trader. These ones that I marked here is mostly for swing traders because it takes a long time before we have a swing. All right, but I want to show you how you can use support and resistance levels to get opportunities every day as a day trader, or maybe once or 3 times in a week. At least you must see an opportunity every week with this particular method. So I'm going to explain what happened starting from this particular level of resistance up to this particular level on this trend line. So I'm going to separate this with a vertical line like this. So first thing that you need to know, which is very important, is that if market is trading at a key zone like at this particular point, you must be able to identify the next direction that the market wants to go. Looking at this particular level, you can see that the market has already taken out this particular high, creating a new high. All right, now that the market has created a higher high, you are expecting the market to come down to create a higher low before it continues to take out this level. So having this in your mind, it means you should be expecting to sell the market at this particular point. So that is the first thing that you need to have in mind, because without the knowledge of the next direction that the market or the price is trying to go to, may be very difficult to understand this particular strategy. So when you have identified a clear path that the price wants to go to, then it will be very easy for you to follow up with this particular strategy. So it is expected that the market will trade anywhere within this place and trying to touch this particular trend line, but you are not expecting it to take out this particular low since the market is in an uptrend. So these are the things that you need to have in mind. Then we are going to go down to 4 hours time frame, and I'll show you the next thing to do there. So now in 4 hours time frame, our concern is this movement from this particular support level to this particular resistance level. Okay, we are going to mark out all the support and resistance level that were formed within this particular movement up to this point. Okay, I'm going to do that. This is a resistance level which later turned to a support level here. This is another one. This is another one. This is another one. This is another one. And probably you can also use this. Okay, these are key levels in the market within this particular run, this particular movement that came up to this level. So after marking these levels, now coming to this part, when the price decides to run up to that level that you're expecting it to come to, these levels are going to play key roles in giving you the opportunity or opportunities in the market. Now, as you can see here, first of all, market run through this particular 2 levels, okay, reach this particular resistance level here, will turn to a support level here, which push the market back up to this particular resistance level, which will turn to a support level to push the market down. Now, this level is taken out, up to the next, this support level now became a resistance level here, push the market back up to this level, turn into a support level, push the market beyond this level, creating the next lower low. All right, this is how you can use this method to get opportunity. First, you already know where you are expecting the market to come to, so you don't need to be scared. You already know the next place you are expecting the price to go to. So all you just need to is to allow the market to fill in the positions where it's supposed to reach, and then you use your knowledge of other blocks and the knowledge of fair value gaps to find opportunities where necessary and get into the market at proper time. So we're going to go down to hourly time frame, and I'm going to show you how you can now use other blocks or fair value gaps, or even still breakout structures, to get opportunities to be in all these movements. So in 1 hour time frame, this is exactly where you find out the right point, the right place to enter the trade. So now, looking at this particular movement from this level of a resistance up to this particular level, which is now a support level, you can see that when the price came down to this point, it first of all came back to this particular level. Now, if you look at this particular level, you can see that the market returned to this level several times without breaking it, which means that liquidity has been created here. So your little knowledge about liquidity and breakout structure will really help you a lot at this particular level. So a lot of traders entered position here, selling positions, but the market didn't continue. So what happened? The price came back to take out all the sell side liquidity that were placed here. So all the stop loss that were placed around this position were swept out. That's stripping of liquidity. So if you look at this point, you can see that this particular low was taken out, creating a breakout structure. Now, these are tiny things that you need to put into consideration when analyzing the market to help you understand what is going on. So this is more like a breakout structure, and after this breakout structure, then you already know that it is time to be in the market. So when the market returned at this level, you would have taken a position at this level or at this level. Let me just show you. You would have taken a position here or here. So placing your stop loss just a little bit above it here, and your take profit somewhere here for the first one. Or if you entered in the second one, you would have placed your stop loss just a little bit above here and your take profit just here. Now, coming to this second one, you can see that when the price reached to this level became a support level, which pushed the price backwards. Now, look at this level. This high here was taken out. So when this high was taken out, the next thing is that the market broke this particular structure. Look at this here. This is a breakout structure. So when this structure was broken, when the price came to this level, returned again, and then broke the structure with this particular impulsive movement, and then returned on it, you already know that this is your exact time to be in the market. So you would have entered a trade here, placing your stop loss just above this, and your take profits just at the target point, the point that you wanted the market to reach from daily time frame. Now that the market is trading at this key zone on the trend line, and also looking below here, you can see that this is a support level. Now, considering that the market is in an uptrend, you are not expecting to continue going short at this level, because the market has reached a point where it needs to reverse and keep going up. So you just need to wait and see what will happen at this particular point. So if market tries to break this particular support level, you know that generally the direction of the market has changed to downtrend. Then you continue looking for short in the market. But if it decides to change structure and continue going up here, then you should be looking for bullish movement, because normally the market is in an uptrend and you don't expect the price to take out to this particular support level for now, until something happens in the market. Maybe the market wants to change direction generally. So this is exactly how to trade. You reduce the level of risk, the level of losing, and gain more. So as a young trader, this will help you a lot to make a lot of money. So if you find this video useful, please do well to click the like button and the subscription button. This is the only way you can help us to promote this particular channel. And also over here are other videos that we did about forex trading. You can also watch them, and this will help you to improve your trading journey. So remain in the channel and keep trading and winning. See you in the next one.